Good afternoon and welcome to Gdańsk at the head office of Grupa LOTOS. Ladies and gentlemen, we are going to talk you through today the consolidated financial results for Q1 2021. A very warm welcome to all of you who've joined us remotely again, representatives of editorial offices and editors themselves. We await impatiently your questions, invariably at media@lotos.pl. We've received some of such queries already, and of course we are going to try and provide you with answers to those. We're meeting remotely again, and well, we have to carry on with this mode of communicating with you as the combat against COVID-19 is on, but I believe Victory Day is coming, and we do hope that the next meeting is in the form we wish they are. We are also quite uncomfortable when we can't hold the behind-the-scenes talks with you and we can't provide you with proper questions and hold interviews, because this is also something we hold truly dear, so that you get all the knowledge about the activity of Grupa LOTOS. Well, today the lineup is Wojciech Zemtaler, Head of Investor Relations at Grupa LOTOS, and Adam Kasprzyk, myself, Head of Communications and the spokesperson, always at your behest. No face coverings today because there are fewer persons at the table, and that's why we are more socially distanced. And, of course, as I've already said, we still hope that this is the last meeting in this form, because this is a genuine wish. We've got some good news for you. We are really content and pleased to announce the following, and I give up the floor to Wojciech Zemtaler, Head of Investor Relations at Grupa LOTOS. The floor is yours. Thank you very much, Adam. Good afternoon, ladies and gentlemen. A warm welcome to all of you. It is my pleasure to have some good news to announce, as it's already been said by Adam. Oh, very good news indeed, actually. We all know that 2020, globally, across a variety of industries, including our own, was a year of incessant combat for survival, but I believe we came on top of that. We braved the storm, and at the turn of 2020 and 2021, we've posted some very strong financial results. EBITDA LIFO, which is the key parameter we use, amounted to 615 million Polish zlotys. And if we divide it into exploration and production, 167 million of EBITDA, better external environments. As we've said, our strategy based on those two legs to stand on, because historically we've observed the situation that whenever refining and marketing is suffering, then exploration and production actually compensates for us. Refining and marketing, very good, 444.7 million of Polish zlotys. A very important matter, which is we've got positive net profits, 353 million Polish zlotys, and something that's affected our liquidity is working capital increase. I'm going to talk you through the details later on when we talk financial results. A very important event for Grupa LOTOS is this scheduled shutdown, which is spring 2021. That's our code name for it. The cost in the areas of 50 million, but we'd had 130 million earmarked for it. The complete accounts will be presented when the maintenance is finalized at the end of Q2. The scheduled maintenance means that we need to be more flexible and more prepared and planning ahead, just to make sure we have enough products which don't leave the refinery but are awaited by our customers. Speaking of exploration and production, we've got some good news that we'd announced before. We have successfully managed to stabilize production at Utgard field, and more about it when we talk about exploration and production. And some more info about the future is, of course, our cooperation with PKN Orlen and Polish State Treasury as a majority shareholder, who has specific plans about the holding. Speaking of the capital takeover of Grupa LOTOS by PKN Orlen, in March 2021 we have officially launched preparation to make us flexible enough and make it possible to provide those remedial measures which condition the takeover of Grupa LOTOS by PKN Orlen. Moving on to the next slide, i.e., we've got a depiction of what I've already signaled. We've got LIFO EBITDA 615 million, way better than Q4. First of all, we have weaker quotes of oil industries here, and also for refining, for exploration and production, and also refining and marketing, which affected negatively that we had to deliver on the standards of ecology. Let's say this is the common denominator of those, so we were heavily burdened by those. But now let's speak of Q1 2021, and it's really good. Refining and marketing, top right corner, less of a volume, as you can see, because due to scheduled maintenance, parts of the refinery was actually phased out in March. And of course, we've also got imports of other products in diesel to provide our customers with products. The bottom left corner, we've got EBITDA, LIFO to EBITDA, and this is this unfavorable operating cash flow in the second quarter. This is the football, so you need to catch the goalie off guard, and so we've got this snapshot actually, and I'm convinced that this parameter will improve in the weeks to come. Daily exploration and production, hydrocarbons production, again we have a decrease. Moving on, the macroeconomic environment. In our case, it's a very important indicator because we depend on how situation shapes up on the global markets, and we've been showing you that for a longer time, just to provide you more of a picture of the difficulties we need to grapple with. First of all, we have a decrease in demand, and that's global crude oil consumption. As you can see, in Q1, Q2 2020, that was the moment when the pandemic struck. That was the moment of way better parameters. Speaking of actual curbs or lockdowns, because we have very few cases compared to today, but the lockdown was so severe that demand dropped fundamentally, and that of course made it harder for us to operate. And as you see, it has rebounded, and you can see it's up to 94% in Q4 2020 to 94 million of barrels per day, sorry, not percent. And the outlook for the quarters to come is a positive one, and we hope it will allow us to rebuild the market to the levels, the pre-pandemic levels, by the end of this year, which will translate into our financial results. And the other graph we're showing is the global dynamics of passenger air transport. It's a truly indispensable parameter, actually, because some of our products, i.e. jet fuels, are those middle distillates, and the breakdown of the dynamics of passenger air transports informed the waning demand. That also meant that demand contracted acutely, speaking of jet fuels, and this is currently holding in check margins for middle distillates, including diesel, which makes it impossible for us to deliver on the margins we'd assumed beforehand. Let's move on to slide number 7. This is something that comments on how we saw ourselves when we published the current business strategy. On the left, you see parameters for exploration and production, i.e. crude oil and natural gas. And it's all decreased, but for refining and marketing, the situation is way worse, especially if you look diesel cracks, $34. It's way lower than we'd expected, and not only us, but the entire market, actually. And of course, it has a negative result on our financial results. Let's move on to the next slide. This is where you can see the Polish market situation, and it's quite important that we pause for a moment here, especially what you can see on the right, diesel consumption and gasoline consumption. This just shows actually the strength of the Polish economy and its resilience to the external situation. This mobility and fuel consumption is better than to our neighboring countries, and we are very happy to see Poland as a premier market, because we can also actually drive a capacity to the max. Looking on the left, if you look at Polish GDP growth or dynamics, because we'd been actually used to the fact that it would always post growth, but for now we've seen actually negative results for GDP, minus 1.5%. This is the forecast of one of the banks for Q1 2021, but also it's a forecast for the entire 2021 by the same bank, which is 4.7%. And if the situation really shapes up this way, the market is going to develop well, and we're also going to deliver better margins, post better financial results. Moving on, this is where you can see the development of the external situation that we've seen across the past quarters. I'm going to focus on exploration and production. After the breakdown of crude oil quotes and prices, and also natural gas, today we can see that the markets have rebounded, and we can see it in the financial results of our exploration and production segment. But also on the right, you can really see the crack spreads for diesel, $34 lately compared to last year. And this is what means that it can definitely improve. Once the situation has improved, we can use it. As you can see, there's a lot of potential for it, because currently crack spreads for diesel prices are on actually highest or lowest levels on record.
And now for exploration and production, we are having the result at the level of 167 million zlotys, which is a growth by 20% comparing to previous quarters. We are benefiting from higher prices of natural gas and crude oil, which compensates for the decreased sales volume in Poland and Norway. This quarter has been so that we have been producing at a more or less constant level, but the sales were decreasing, which means that in the upcoming quarters, if the sales volumes will increase, then we will enjoy a better EBITDA, given that the prices will remain unchanged. The effective intervention in Utgard field, which I've mentioned, and the regaining of the capacity, the hydrating of the boreholes, and importantly, the attempts that we've used to take have been inefficient, but now we are capable of maintaining production at the desired levels. And finally, we have the Yme field, which should commence production in Q4, and everything is on schedule. And given that the environment will remain beneficial and favorable, we do hope that in Q4 the production from Yme field will be underway. Here we have a snapshot of all our production assets, as well as lifting costs and production costs, so I won't dwell on that. And in slide 13 we have overall production figures. We have natural gas and crude oil. On the left-hand side we can see a decrease from Utgard year on year, although we are rebuilding our construction. However, our position, however, the production level is lower. May I remind or stress that Utgard has a natural decrease in production. So today we saw significant corrections or reductions comparing to the initial time. We see also less natural gas. Since we've been following our current strategy. Moving on, as always, in the first quarter we don't see significant changes. The reserves and balance positions are always compared to the previous year. So the production in Norway, Poland and Lithuania give grounds to the conclusion that the consumption is not fast enough compared to our reserves. So our reserves will be with us for many years moving forward. As for the operating results of the production and exploration segment in Q1 on 2021, given the stable macroeconomic situation, we don't have what we used to see in previous periods a year ago, which is the write-offs that were the result of lower crude prices. Currently 168 EBITDA result without LIFO gives us a very optimistic outlook, and if the prices were to remain at this level, we will have very good results at the end of this year. Moving on to refining and marketing, the refinery, which is the heart of Lotos, with clean EBITDA LIFO result at the level of 444.7 million zlotys, which is enhanced by the so-called effect of cheap layers of crude oil, which is an artificial maneuver which sort of overestimates the result. This is due to a significant change in crude prices. And may I remind that in Q2 past year, our result was deeply affected by the expensive layers of crude oil. So this effect works both directions. So last year we had barrels at $70 or $80 that we had to take into consideration, and conversely today we have barrels of oil from September or October, so the result is much better. So as you can see, it goes both directions. Other bullet points cover the maintenance shutdown. However, one element I'd like to address is the Modal refining margin, which was under high pressure at the end of the last year and throughout most of the 2020. It is still far from our expectations. However, importantly, the tendency is positive. The first quarter ended with $2.6 per barrel, but April has brought us prices at level of 4.5. We'll see whether it's sustainable. And of course, this Modal margin is still burdened with low crack spreads for diesel. But it is reasonable to expect that the situation will not deteriorate. This is our refining output structure. The maintenance shutdown means no processing of oil and purchasing only as much materials as our clients require, which means that this blue color of middle distillates is growing because we are not processing oil and we do not have any heavy distillates or heavy products. We focus mainly on middle distillates. So this is definitely not a situation in which the refinery will be working at 100% of its production capacity. Here we have operating results from the segment. This is 445 million zlotys. It's year on year. It's a weaker result. However, the macroeconomic environment is less favorable. So we do not have as many one-offs as last year. Further on, if we look at the strictly reporting results, the EBITDA is at the level of over 700 million zloty, which is much more than last year. But last year we had this heavy impact of LIFO effect and the and inventory write-downs, which are non-cash. So this year the situation is more clear, so to say. Moving on, model refining margin. As I've already mentioned, what we'd like to stress is the high parameter in the Q1 and Q2 that were not always met, as the model margin is an indicator that points to how well we're performing. But apart from all other disturbances since 2020, we first had the EFRA installation launch, which is still far from its full capacity, and then was hit by the pandemic. As a result, we had to optimize our activities in other fields so as to secure as high margins as possible, which means that we did not redefine the model refining margin. And in 2021, as you can see, we have a growing trend, which offers an optimistic perspective. And now for consolidated quarterly financial results.
Actually, there isn't much to add. It's been said, speaking of exploration and production and also refining and marketing. Of course, we've got positive net profit that we've posted. Yet again, we need to make it clear that the net loss of last year wasn't really a yardstick because it was mediated by a number of non-cash based circumstances. Moving on to the next slide, operating cash flows versus capex. The minus 1 billion in Q1 of 2021. This is actually this snapshot at an unfavorable moment, mediated by a number of factors. First of all, we've got reassessment of our stocks, so the reassessment increases. The second element is this inversion of cash flow because we use financial instruments, for instance, discount invoicing, and that allowed us to secure some cash late last year. That's why we have negative results. And the third factor would be inextricably related to the fact of the scheduled maintenance. We don't refine crude oil, i.e. we don't have extended or deferred payments. We just buy diesels that we need to pay for within a matter of days. And that means we have much fewer payables, so we need to find more cash for our operations. But it should not be something that may keep you awake at night, because those differences across quarters, as you see, are quite dramatic. However, the situation, rest assured, is stable. Moving on, though, net debt or debt parameters globally, and for reasons I've already mentioned, are on less favorable, let's say, levels than now. Our net debt is 3.6 billion Polish zlotys, which is the result of a commitment of operating capital, and about 2 billion of it, so you can translate that or see that as a reasonably large chunk in this 3.6 billion. And this is a snapshot at the end of March, and that of course translates into a gearing ratio, net debt to EBITDA LIFO 2.7. So we are thoroughly aware that it has an effect, but of course, do remember it's just a snapshot of temporary situation, and also net debt to EBITDA LIFO took into account two very highly unfavorable quarters, because we take into account so possibly it's now on a much better level, so we needn't worry about liquidity. Now I give up the floor to Adam Kasprzyk. Thank you very much, Wojciech. Wojciech Zinktala, the Head of Investor Relations at Grupa LOTOS. We've been waiting for your questions, and we have got some from one of the editorial officers, Trójmiasto.pl. Robert Kiewlicz, editor of Trójmiasto.pl, asks, what's the stage for internal organizational processes at LOTOS to comply with the remedial measures authorized by the European Commission in July 2020? Do we know if the offloading of assets of Grupa LOTOS will take place? And if so, what assets? And also a question which has been asked time and time again, and I think this time we're going to provide a similar answer. When do we expect the payment of compensation for the delivery of contaminated crude oil in 2019? Thank you very much for those questions. Answering chronologically to question number one, as our current reports, on the 12th of March, we started the reconstruction process as part of our capital group. It's a complex process, and many teams are committed to that process, and we have been working on it. But now a month has elapsed, and as of today, I can confirm that we are fully committed and we fully cooperate with the Polish State Treasury and PKN Orlen. It's all been assured by the agreement concluded in August last year. A will has been expressed to finalize this transaction, and it hasn't changed, but for now we haven't got too much tangible information to actually lift the lid on the processes to the outside world. So for now we can't share any details with the fact of divestment process, i.e. which companies or assets could be spun off, at what conditions, and so on. Taking into account the regime for listed companies that applies, which is highly rigorous, and as soon as we have information within the group, we are going to pass it on to the general public. So as soon as the information has actually arrived, we will share it with the outside world. And the second question that has been asked, as it has been said by Adam, we have been in negotiations with all the stakeholders with regard to that compensation money, and so far the situation hasn't changed. We haven't arrived at any conclusions, so there is no reason to share any information with the general public with regard to this matter. And also, as soon as this matter is dealt with, we are going to actually announce the effects. Thank you very much. Thank you very much. And we have some more questions with ISB News. Piotr Apanowicz, editor. What's refining modal margin you expect in the second quarter of 2021? And averagely for 2021, what was the contribution of the EFRA project to the margin in Q1? Is there still a chance to make it to the assumed $2 per barrel? Thank you very much for those questions. Of course, it's a truly fundamental parameter, and we've been monitoring it as Grupa LOTOS because it informs our financial results. The April margin so far has been shaping up on the average level of $4.5, so the April has actually been quite promising, and it seems that the level of $4.5 is something we could expect to see until the end of this quarter. But what we need to reinforce here is that we've been acting under truly variable and unpredictable conditions, and what can change is that specific parameters could change dramatically. And despite the fact that the reading of the margin today is on quite a satisfactory level, colloquially speaking, the crux of what we expect for Grupa LOTOS is a rebound of the diesel for middle fractions, or middle distillates, which has been under a lot of pressure lately, and it's all down to the limitations to air traffic, because this is what keeps diesel cracks in check, as there is a lot of swinging, i.e. refineries, instead of jet, they produce more diesel. So there is a glut actually on the market, and demand, which actually reflects global economic activity. Demand just cannot satisfy the actual supply. Speaking of the margins generated by EFRA, attributable to this project, it's very difficult to explain it, but as of March 2021, we've been under a non-optimal regime, non-optimal under EFRA, so we can say we could apply a modal and put all the parameters together, but it does not translate one-to-one into our margin as such. Is it possible to still hit the targets? Definitely yes. I think I've already partially answered this question, because just to hit this target objective is to unlock the demand for diesel, and in our projections and forecasts, and how we would like to see global prices to shape up to give us at least those additional $2 per barrel. And we do see such a scenario, but of course a lot of it is down to the rebuilding of the global demand for middle distillates, and of course it's mediated by how economies rebuild. The Polish economy is probably actually, let's say, a beacon of good hope, speaking of this rebound of more than 7%. And we will see. We hope we can see those returns on investment we'd assumed. Thank you very much, Wojtek. No more questions asked. Thank you very much, ladies and gentlemen, for joining us. And of course, we also feed off the information announced by the Polish government and the loosening up of pandemic measures, which also translates directly into our operations and business activity and whatever has been happening in Grupa LOTOS. I would just like to say two things about this major undertaking that we have actually concluded at our business, i.e. the major scheduled maintenance, which has engaged a lot of providers and staff, all of them working under full pandemic regime. And we have managed to conclude it according to our assumptions. And we've got this permanent crisis group who ensure the safety and security of 5,500 of our staff. And the chair Zofia Baryła has been supervising it all, and everything been going well, also including the delivering on the objectives that have been set. So all the investment processes are also underway at Grupa LOTOS, and I would like to stress the fact that everything's been going just the way we'd assumed, and all the information we could share with you today with a degree of satisfaction. We do. We hope that the next of our meetings will be held in a different formula, and this is what we wish for. As I said when I was welcoming you, we just really can't wait until that's the fact. Thank you very much to the representatives of the editorial offices who've been following this conference. I would like to thank Wojciech Zengteler, the head of investor relations at Grupa LOTOS, and also to all those who, under the sanitary regime, have been working to provide you with these events, organizations for events, and also, of course, marketing office, the press officer, interpreters and cinematographers, and all those persons to whom we owe the fact that we could share this information from Gdańsk today.